Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar bearish sentiment strengthened after the RBA monetary policy announcement yesterday kept its cash rate fixed at 1.5% for the 26th month in a row. The post-RBA announcement saw the Australian dollar rally, but was contained by the resistance of 72.40.60 after posting a high of 72.37. Although the RBA left its policy rate unchanged at 1.5%, as widely expected, it reiterated in the statement that interest rates were likely to stay at record low for a foreseeable future. Commenting on the RBA's announcement, the final paragraph in the governor's statement is identical to the statement in September, emphasising that the progress is in reducing unemployment and returning inflation to the target is likely to be gradual. On the other hand, the US dollar overnight did strengthen and right across the board saw the index rally up to 95.37, just beneath the key resistance of 95.60.65, which was posted around September. Since the rejection of the 60-day moving average, that now holds at 73 figure, is the fact that the market reaches its first objective of 71.65 overnight. It is assessed now that the market will pressure the downside and not look towards the first support at 71.65, but the objective of 17.95 and reassess from there. Any advances does expect to find the resistance still around 72.40.60 if challenged. Overnight, the euro also reaches its objective of 1.1520 after posting a low of 1.1504 in New York. It would seem that Italy's budgetary concerns have returned to haunt the market and now puts further pressure on the euro. Although we haven't completely broken the 1.1520 level, it is ascertained that we would see further weakness beneath there to 1.1455 to an objective of 1.1370.75. With the technical implications still remaining bearish, you can see here that the fact that I do expect to see further weakness towards the support. The resistance at this stage is at 1.1595 to 1.1665.75. For those that are trading short dollar yen, while the market did ease, and as you can see from the weakness overnight, that the market is now looking towards a support that comes in at 1.1345. Now, from the rejection of 1.1410, a break beneath that level of 45 would give further scope to 1.1260.75, maybe down to 1.1180. On the day, though, resistance expected to cap at 1.1410. The pound fell further overnight, and as you can see, it's getting closer to the safety net that holds at 128.40.80. I do believe the market will pressure the downside, and in turn, expect to see a break further, with the immediate support coming in now at 129.40, and as I mentioned, the support 128.40.80, that is, before any initial buying. Any rally should see resistance on the day around 130.20.25. So with the Italian situation worsening, is the fact that the market turned back to a safe haven and bought gold from 1,180 to a high of 1,208. We haven't broke the top side of 1,212 as of yet, but the pressure is back on. As you can see from the technical implications, they've married up to a slightly bullish case. A break above 1,212 would give us further indication towards the region of 1,218 to 24. Support on the day seen at 1,199. No continuation on top of the oil outlook, and as it still loiters around the 75-cent mark, $75 a barrel mark, that is, should I say, is that we could see a little bit of weakness coming back into play. Therefore, we could see a pullback towards the support at 74.5, with the base now expecting to hold where the break level was at 73.55.75. If we do get a close above 75.75, then this will give further scope to the upside to 76.277. But I'm a little bit skeptical of this move. As you can see, the MACD is coasting sideways, but the other indicators are appearing to be topping out. So therefore we could see a retreat. So let's see if the market does in the next 24 hours back away from the current highs. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the rest of the day that's ahead.